Thank you so much for watching my YouTube channel. And guys, let's see the stock which has already overbought. And we are going to listen this video, and then I'll keep continuous analyzing more and more. Let's hear it, guys.
Left off here, the idea that when you look at some of the key measures, whether it's RSI, whether it's 200-day moving average, you can look at some of these major indices and certainly make a case that things have maybe gotten a little bit overbought.
Yeah, it sure seems that way, Romain. Obviously we've had these unbelievable runs. I mean, the Nasdaq up like 40% and from October, I should say. But of course, everything has been so narrow that we worry about that as well. But I think the one of the things too is that we are reaching an an overbought situation where the valuations are getting quite extended. We have the S&P 500 really reaching that 20 times forward earnings and 2.4 times sales. And those are the types of things where you sit there and you say, wait a minute, is the second half of the year really going to be that much better so that these valuations can play catch up? And, a lot of people are talking about a soft landing. Well, soft landing isn't, increased growth.
Yeah.
And that's really what you need when the market gets as expensive as it is and overbought as it is. So we, run into a little bit of a rough patch as we get past the end of the second quarter here.
Well, I am curious about the second half of the year, Matt, and I am curious when you sort of look at the price action in the market, whether you think that is a rally that was on the back of expectations for either a stronger economy or stronger earnings, or was this simply kind of a trend chasing amid all the AI hype and some of the other hype here that maybe gave folks some short-term optimism?
Yeah, I think it's the latter here. I mean, what is the what have we really seen to see that the second half is really going to be that much better? It's interesting. Really not a lot. There are some things out there. Don't get me wrong. I mean, you mentioned the housing earlier, and of course, consumer confidence has been going up a little bit. But we also see where we're seeing cracks in that area where we have record high levels of credit card debt, and we heard a whole slew of retail companies saying that the consumer is pulling in their horns.
So guys, that's the video talking about overbought stock. And guys, let's see here again this one. Like guys, you see Alibaba today is coming down. Alibaba guys is down 3%. Tech again, Alibaba now crypto friend came and following Daniel Zhang stepping down. So Zhang stepping down, guys, stock coming down. And another one here, guys, say this one John talking about the pond. Let's hear this video over here. Yeah.
You said that, in your view, the biggest risk for the market today is a lack of risk being priced in. What are you saying when you talk about that, given the run-up we've seen so far?
Yeah, Lisa, when you think about the VIX at 14, high-yield spreads at 400 basis points, and now the PE ratio on the S&P 500 reaching a one-year high, about 19x, there's just not a lot of risk being priced in. And right now, the time to fix a roof is when the sun is shining. When you look at portfolios that have been overweight risk, that have actually done well this year, you've had to have real risk on to do well and outperform this year. We would look to trim into some of this strength and redeploy into higher quality fixed income, take some chips off after such an exceptional run.
What is sort of the defensive trade? What are the safer, more conservative areas to hide, especially given the fact that we do still have a pretty sticky inflation? And a lot of people have been talking about some of these tech names that have driven the rally as being the havens, as being the defensives.
I know, right? And I think quality as a factor is working in the equity market, which would usually translate to the bond market. What's interesting in the bond market right now is CCC high yield bonds are the best performing part of the corporate bond market. So it's high yield, it's bank loans. There's very little higher quality parts of the bond market that are outperforming. And I think for us, that looks like an opportunity. We're looking at the investment grade bond market at around $89 price, weighted average price, $100 being par. They're trading at $11 discount. We're looking at 5% in yield. And we're more okay with the duration. When everybody hates duration.
Yeah, guys, that's the point. yeah, this guy is seeing pond there is opportunity on pond, and guys, let's say you see U.S. housing starting and expecting 21 jumping on May, so that guys this is huge, and to say expectedly jump 21%. This percent is huge, guys, and let's hear it, guys.
Mr. McKee, you've got the first blush of today's and tomorrow's housing data.
It's a little disappointing that one of you has hats on because I tell you to hold on to your hats. Housing starts up 21.7% last month. Building permits up 5.2%. In April, housing's down 2.9%. That's a revision lower. And permits down 1.4%, which is basically unchanged. But this is an enormous jump in houses under overall 631,000 annually for starts and building permits at a 1,491,000 rate. And this is just, there's got to be a reason why it is strong.
There's got to be a reason. It's as simple as this. I see it, Mike. I look at, say, Zillow. Pick, Mike, there's nothing for sale. How messed up is our housing economics right now?
Well, our housing economics is sort of topsy-turvy because it should be the area that gets hit hardest by the Fed's rate increases. But you're right. There's not much for sale because existing home prices are rising because there's not much for sale. And that keeps people in place. Nobody wants to pay the new higher interest rates. But analysts say what happened after the Great Recession was everybody started building apartments instead of homes because everybody didn't want to buy homes because of what they'd gone through. Now people want houses, and there aren't enough houses out there.
A good time for pizza, in my view. But yeah.
So guys, that's means like recession. If house market is jumping up, guys, means there is no recession. Bull market's already started. We saw Bitcoin guys pumping. We saw Bitcoin guys pumping today, like 6%, which is huge, guys. And I think, guys, let's see restaurant spending. Let's see this news, guys, about the U.S. restaurant spending, and let's jump in. It's loading, guys.
It's always a good time for pizza, in my view. But yes, we got a slew of data out here in the United States last week, both CPI and retail sales. And when you looked across the numbers, yes, consumers still spend about 8% more in terms of retail sales on food outside their home. But when we looked at how much prices for food away from home, they were actually up 8.3%. Again, this is the first time that this has happened since early 2021. That's when we saw consumers go out in droves, go back to the eat outside of their houses after spending so much time inside from COVID-19. And it really reflects, I think, a lot of what we've been hearing from various companies reporting earnings about this concern about where the consumer goes from here. They're pulling back on some